Hey guys, this is Dave from MortgageGuy.com. And in this video, I'm going to go over assumable mortgages, FHA, VA, USDA, and everything you need to know about them. But before I do that, please subscribe to my YouTube channel to keep up with more videos like this. So one of the benefits to an FHA mortgage, a VA mortgage, and even a USDA mortgage is that the loan can be assumed, okay? Meaning that if you're the owner of the home and your mortgage falls under one of these, the buyer who wants to buy your home could assume the mortgage that you have on it. Now, the filming of this is in late 2022. What's one of the biggest benefits? Well, if your interest rate was ridiculously low, let's say 3.5%, and now the market is 7%, there could be a value or a benefit to you allowing them to assume it. Better terms, maybe get more for the home or to sell the home quicker. So that's the big benefit of assumable mortgages. But there's a lot of information going around where people don't know the specifics, and there's a lot of things that they have to know, okay? Number one is, yes, you're taking over or assuming the mortgage. So you get the interest rate and you get the payment. You also only get the balance and you get the amount of time that's left on that mortgage. What does that mean? If it's a $200,000 loan amount that you're assuming, but the home is selling for $250,000, you have to bring that additional $50,000 to closing. Okay, this is not a new mortgage. All right, so you have to know that. The other thing is this. The servicer, or technically really the holder of that mortgage, is the one that is going to determine if the client falls under credit worthiness, is what they call it. It's really them underwriting to see if they want to even let that buyer assume it. And the truth is, there's no guidelines on this. So that lender is determining if they want to allow it to be assumed or not. So there's a gray area. That buyer may qualify for a new FHA loan, but they may not qualify for the assumption of one, okay? So you have to be careful that you're not over-promising as a realtor or a seller or anyone else that they're gonna automatically be able to do it because they got approved for an FHA loan. The truth of the matter is, and nobody's gonna talk about this besides me probably, is that the holders of those mortgages do not want to have somebody else assume them. They'd rather them refinance, have them get paid off, okay? Especially with it being a lower interest rate, okay? So there's something to keep in mind there, that it's not something that these servicers and mortgage holders want to keep going forward. So they may find ways to not approve it, okay? I've heard some lenders say that they don't even allow it, which is actually not true and illegal, because both of these loans, FHA and VA, and even USDA, the third one, are allowed to be assumable. So that's not an answer. If you hear that, they're doing something illegal, okay? Now, let's talk about some additional factors here. One, you could actually have other people assume your mortgage, right? Maybe there's a death and a relative is going to assume it. Maybe you want to sell your home to your child. They could assume it. Okay, so there's some benefits there, especially because you could use the equity in the home, and if that balance is all you want to be, let's technically say, paid off, then you could have your child assume this mortgage, leave the equity in the home, and they're not having to bring money to closing or very much, okay? And the one thing that everybody would then ask is, hey, how much exposure is it for the seller going into it? Well, in both FHA and VA, the seller is signing and doing what's called a release of liability, meaning that mortgage is gone. Even though somebody assumed it, that mortgage is gone and off of your record. So if they were to miss a payment down the line, you're okay. It's not going to hinder your credit. And for a veteran, you actually want to see if the vet can use their VA eligibility when doing the assumption, so that way it doesn't hold on to yours, okay? Because keep in mind, if you use some of your VA eligibility, then you have a veteran assume that. Your eligibility is tied up, which could limit you getting another VA loan or getting a VA loan with no down payment, okay? So look into that. I did see that FHA says that within 45 days of applying for the FHA assumable mortgage, that a determination has to be decided by 45 days. What does that mean? The buyer talks to the mortgage holder, applies, provides all the paperwork, and within 45 days there needs to be an answer. Here's something to read in between the lines that's also concerning. How long will these loans take if you go this route and you're tying up that property? Could it be 30 days? Could it be 45? Could it be 60? Could it be 90? You don't know until you're into it, and each lender / servicer is going to be handling it differently. Okay? And some servicers or owners of those mortgages, mortgage holders, who do not originate loans, so they're not having applications, underwriting, closing, all of those things, they may outsource this part of the process to a different company. Another thing to be concerned about that could affect the process. So I did this video because at the time, this is going to become a bigger and bigger topic that people are going to talk about. And my concern is that people are selling it and saying it's available and they don't know the details. This is a difficult thing to get done. In my experience and my research that I've done is that many of these mortgage holders do not want to do them. And because the guidelines are vague, it just says credit worthiness, it does not really dig into the specifics on a yes or a no of you going into it. So if you're an agent or a seller selling your home and you have an FHA or a VA mortgage, you may want to open up those communication channels in advance. Hey guys, what's your process? How long does it take to review this? Have you done any? How easy is it? Get a feel for it, right? Don't overcommit to something and then get stuck in a spot that you can't get out of. All right? So that is the breakdown on FHA and VA assumable mortgages, the pros, the cons, and everything to know about that in this market right now. All right? Hope you found that information helpful. Comment down below, like this video, subscribe to my YouTube channel, and if you find my videos helpful, I'd love to be your lender. Thanks, guys.